So it's all the same guidelines as traditional VA. The only thing to keep in mind is we are qualifying them on the purchase price plus the renovation amount. So if we're looking at maybe someone who doesn't have a property yet, but we know they're looking at a renovation loan as a solution, just qualifying them on purchase plus renovation amount, but no difference on credit qualifying. It all goes to VA guides.
Welcome to another episode of Helping Heroes Become Homeowners. I'm your podcast host, Richard Sarey with Alliance Mortgage Group. If this is your first time listening to our podcast, we welcome you. We've got a really good topic today, one that I'm a little bit familiar with, but I'm great to have my guest on today. We're going to discuss the VA renovation loan and how that can benefit the veteran active duty member at the time of purchase and after they own the property. So I want to welcome Trey Bogart from TPO GO. He is a vice president over there, and he is the expert when it comes to this type of product. We welcome you. Thank you for joining us today.
Thank you, Richard. Thank you for having me on, and happy to talk about the product, especially renovation. There's a ton of benefits to it, and happy to talk about it.
Yeah, it's been a while. We talked earlier before we started that it's been about 5-6 years since I've even entertained this product. The need out there is probably greater than I realize. So I'm really excited to talk about this and get this word out to our veterans and our realtors. I think our realtors really need to know how this product can benefit them as well. So let's jump right in. So tell us, what exactly is the difference between a renovation loan for VA and your traditional VA?
So it's only slightly different than your standard VA loan. All it is we're financing on a purchase. We're financing the cost of the purchase of the property plus the renovation amount for repairs that want to be made to the property. So there's really no difference on the purchase side. We're basing everything on the as completed value versus the as is value. But it's just your purchase price plus the renovation amount to get to your total loan amount. And then on the refinance side, it's just the payoff amount plus the renovation. So it's really not too much on top of your standard VA loan. We're just including the cost of renovations into that loan amount.
Well, that seems simple enough. Why does the renovation loan kind of get overlooked? Is this just the knowledge base of how it works, or why are we doing all of these like this?
Yeah. So, and that's really what I love to talk about. It seems like there's a fear of renovation because it is an added layer. But when you really break down and look at the guidelines and look at allowable renovations and look at everything like that, it is a simple process. And we're just including an extra party, bringing a contractor in to get a bid from the contractor and then get that renovation added into the loan amount. So I think the reason it kind of gets overlooked is there's just not as much knowledge on it, and there's not as many people who are up to date on the product.
So if I'm looking to purchase a property and I want to do a renovation, I don't necessarily need to have the property in so-so condition. If I want to bring it up to date, I'm allowed to do that with this product?
Yeah, exactly. The allowable renovations for VA is really expanded. You can do almost any renovation to the property. The only thing that you're not allowed to do is mess with the existing foundation or add any luxury items. But I think the VA rehab does get a lot of thought that it's just for those fixer-upper properties, maybe something that's not in livable condition. But the part that we're really seeing right now is just updates, not complete teardowns, not changing too much, just updating the kitchen, maybe updating a bathroom, painting the house, repairing a roof, a little bit siding. But it's not crazy renovations from an unlivable property.
Can I bring appliances up to date with that product too?
Yeah, so you can renovate brand new appliances.
So let me ask you this question. If I have a property that doesn't meet the MPR requirements, the minimum property requirements, can I use that type of loan to fix that, or am I thinking about doing it a different way?
Exactly. You can use the renovations to fix the property, bring it up, meet those minimum property requirements. And honestly, if you start a loan as just a VA and you have to flip it over to a renovation, that's an option there as well.
And it's still 100% financing.
And it's still 100% financing, yes.
Yep. And what's the max LTV I can go in addition to the renovation cost?
So for the loan amounts and how we're structuring that, it's purchase plus renovation amount at the 100% financing, and then we can finance in that funding fee.
Okay. So there really is a win-win. I mean, the buyer gets what he wants with an update, and the seller still sells the home without any loss in their net proceeds with that product.
Exactly, exactly. And that's something too to keep in mind for the sellers out there. The sellers don't have to fix their property prior to closing. If it doesn't meet minimum property requirements, we use a renovation loan to fix that, and the seller doesn't have to do any updates prior to closing.
Okay, so with that being said, the renovations that I may have to do to bring it up to the minimum property requirements, can you walk us through what that process looks like? Do we have to get multiple bids? Is it just whoever we want to use? Can we do it ourselves?
Yeah, so the contractor does have to be VA approved, and VA does have an approval process with their contractors. Um, so the contractor goes through an approval process with VA, and then once that contractor is VA approved, they're allowed to do any and all of the renovations on the property. Um, there's no do-it-yourself option with VA. There is for a couple of other renovation products, but the contractor does have to be at an arm's length to the transaction and has to be VA approved.
And who gets that contractor approved? Is that the loan officer's obligation on the process, or is that something that TPO will reach out to the person on that bid and get them approved?
Yeah, so we'll work directly with the contractor to help them go through that VA approval process. Really, the process is between the contractor and VA, but we're there to assist with any documentation needed or any support that they need.
So is there a difference in the time frame to get a loan like this done in versus a traditional VA loan? I mean, was there an extra couple of weeks, or are we going to fund it with the approved bid, the approved work, and then let them close, or does all that need to be done prior to close?
Yeah, so there is. I typically build in an extra 5 days just for a renovation loan, with the added piece of the third party, the contractor, getting involved as well. We could close these as fast as 10, 15 days, as long as everybody's on their game, getting those documentation over. But I typically build in just a little bit more with the contractor piece. On the funding side, we do fund prior to the renovations being completed. So we'll fund prior to renovations, and then we send the contractor out to start the work on the property. The contractor then completes the work and gets paid in a draw process as they complete work.
Okay, so that's not going to hold up any time frame on a contract. So if we need something done, we could flip it to a renovation loan, get a bid from a contractor who's approved with VA, and get it done that way, for sure.
Exactly.
Okay. Are there any specific requirements from a credit perspective that the customer has to meet to make sure they can do the renovation, or are the same guidelines for the traditional VA?
So it's all the same guidelines as traditional VA. The only thing to keep in mind is we are qualifying them on the purchase price plus the renovation amount. So if we're looking at maybe someone who doesn't have a property yet, but we know they're looking at a renovation loan as a solution, just qualifying them on purchase plus renovation amount, but no difference on credit qualifying. It all goes to VA guides.
Awesome. Okay. That's good to know. So with the realtor, how would a realtor benefit from knowing more about this loan program for our veterans out there?
So there's a ton of benefits. If we're looking to expand the inventory, I know inventory is an issue in a lot of markets right now. Expanding inventory, there's more houses that are available if it doesn't have to be in perfect condition or doesn't have to be perfectly what the borrower is looking for. If the veteran wants, say, a 3-bedroom home, there's a 2-bedroom home that we could renovate in another bedroom. That's an opportunity with VA renovation. So really, it's looking at expanding inventory. And then it's also saving deals in process. If we get an appraisal that comes back that needs renovations and the seller's not willing to do them prior to closing, the renovation loan, we flip it right into a rehab, we get a bid, and then we wrap that loan up in a couple of weeks.
So from a loan officer's perspective on that, if we know we have to flip it to that product, are we having to start that process all over again, or are we just doing a change of circumstance and changing the loan product within underwriting?
Exactly. It's a simple change of circumstance, and then we just add a couple of conditions for the contractor. We need the bid. We need to see their approval. But from there, there's no heavy lifting. It's just a simple change of circumstance.
Okay. Now, let me ask you this question. If I know I've got some NPRs that are minor that the seller doesn't want to repair, but as a veteran, I know that I want to improve immediately, can I add on over and above what the minimum requirements that need to be fixed just to make that happen?
Absolutely. Yeah, so the
Okay.
renovations that you can do on a VA rehab loan, it's not just required renovations. You can renovate in anything on top of those required as well.
And what's the max amount I can add? Is there a limit?
Yeah, so the maximum renovation amount is 100,000. So that 100,000 is just the max allowable renovations. It does include permits, and there is also a contingency reserve that we do require on all of our renovations.
What's that amount?
So contingency reserve is going to be for 10% of the renovation amount. Really, that contingency is built in for change orders. I'm sure if you've done renovations in the past, even on your own, you get started on the renovations and then halfway through you say, oh, I really want to change this. I want to do it this way instead. So that contingency is built in there for those change orders during the renovation phase. If it's not used, it's just to apply to the loan amount when renovations are completed.
And those dollars that we're holding, TPO holds that into escrow, right? They're holding
Exactly.
those dollars.
Yep, we hold those in escrow, and then as work's completed by the contractor, they request a draw for the work that was completed, and we send that out to them.
Okay, so at that point, it's the contractor and TPO's department working on disbursements.
Exactly. The loan
As my
officer.
customer is, I guess, if it's livable, they can move in while these are happening, or what's the leeway there for the buyer?
Yeah, so if the property's not going to be livable during the renovation phase, we can finance up to 6 months, the first 6 months of payments. We finance that right into the loan amount. The borrower's not making any payments, it's coming out of escrow. If the property is livable, they can move in during the renovation phase. And that's all just depending on the scope of work for the renovations.
Who determines that? Does the lender, or is that something from the city?
That'll be determined by the appraiser. When the appraiser goes out looking at the as completed value of the property, um, they'll take a look at that. There's also a HUD consultant that might be involved in the transaction depending on the scope of work. So if we do have a complex scope of work, we'll have a HUD consultant who's essentially just taking a look at from the borrower side, making sure the renovations that are being completed are going to increase the value of the property, as well as to make sure the bid from the contractor makes sense. And that HUD consultant will also deem the property unlovable during renovations if that is the case.
Okay. And this can be used for septic inspection or septic repairs, or if you want to put a new septic tank in there?
Yes, it can.
Okay. Are there anything that VA will not allow outside of, I know you mentioned moving walls, but is there anything outside of that? And I think you mentioned also the foundation, or the foundation can be repaired?
Yeah, so the
Or can,
foundation can be repaired, but the existing foundation does have to remain there. So we
okay.
can't tear it all the way down to the foundation and then move the house on the land. And the other items that can't be renovated in are what's called luxury items. So things like in-ground swimming pools, saunas, tennis courts, those are not allowable renovations under VA.
So would this product be greatly beneficial for someone who wants to buy a foreclosed property?
So that is one use of it. You can buy a foreclosed property and do a VA renovation to bring it up. But again, I do want to emphasize that it's not just for those properties that are distressed and need the renovations.
Right.
Just repairs that the veteran wants to make when purchasing the property are allowable. Things we see a lot is siding, roof, and kitchen are kind of the three major renovations that we do see.
And you mentioned too, we can do this as a refinance as well.
Yes, yes, we can do it as a purchase or a refinance.
And those limitations on the amount is not different between the two. 100,000 is your cap.
Yep, it's the same 100,000 cap for both, and everything goes back to VA credit qualifying for purchase or refinance.
Okay. So with that being said, your type one, type two, does that become a cash out loan at that point where you're restricted at a certain LTV?
So it's not a cash out. It's technically a no cash out refi because no cash is going to the borrower. It's just going and held in escrow for the renovation. So it's still considered a no cash out refi.
What about your closing costs? Is that allowed to be included in the loan amount to make it, I guess, what a type, is that a type one?
I believe type one, yes, and you can roll the closing costs into the loan amount as long as there's enough equity in the property, and that's
Okay.
really the benefit a lot that we see in renovation is you're doing $100,000 worth of work, but you're really getting $150,000 back in equity, and then now there's a lot more room to roll those closing costs in.
Okay. Excellent. Now, is there any, with the renovation loan for the purchase, let's talk about that first. Are there any additional fees or costs associated with that type of structuring?
So there are a couple of fees associated with it. There is, like I mentioned before, the potential for a HUD consultant, and that's for the more complex scope of work. A HUD consultant is really there to benefit both the borrower and the contractor. But on those more complex scope of work, we're going to bring in a HUD consultant. Their fees are very minimal. At most, it's going to be $1,000 if you're doing $100,000 worth of work. Um,
Okay.
so that's an added fee. And then there's just a couple of draw and inspection fees for the post closing. Once we've closed and we're in the renovation phase, there are a few fees for the draws and then for the inspections to make sure that work is being completed.
Okay. So just a few additional fees in addition to what you're getting, but clearly the benefits outweigh the cost of those costs added to the renovation loan for sure. Interest rate. Does interest rate change at all in this product, or is it still your regular traditional VA rate if you weren't doing a renovation?
So the interest rate is just slightly higher than your standard VA rate. Um, so it's typically just about an eighth higher in interest rate for the renovation than your standard VA.
Okay. And we can do these loans in any state. There's no restrictions per state on the amount you can take or anything like that.
Absolutely, across the board, it's all the same guidance in every state.
Excellent. Okay. What So if you were a loan officer and you were new to the industry, but you were doing VA loans, how would you market this? What would you recommend a loan officer do to get the word out on this product?
There's a ton of opportunities for marketing on it. What I would do is I would really go for my referral partners, reach out to those realtors that are referring business over to you, see if anyone they know of is having trouble moving hard to sell listings, distressed properties, anything that might have something wrong with it. That would be my starting spot because we can fix those. And then it's also talking with each borrower. As each borrower comes in and you're doing a VA loan, hey, is there anything about the property you want to change? Is there anything about the property that you don't like, or anything within the first 12 months that you're going to update? Because we can just roll that right into the loan amount. And for a cash flow perspective to your borrowers, there's a huge benefit there rather than it's $15,000 on your credit card or $15,000 out of your bank account in the first 6 months. We roll that right into the loan amount, and it's roughly increasing monthly payment by only $5, $10, $15.
Well, as you're talking through it, I'm thinking of ways to market while you're giving us points on that. But one of the things that I stress is trying to use the VA home loan to help build wealth, right? Build wealth with real estate with your VA home loan. So as I'm thinking through this, if I wanted to buy a multiplex, a fourplex, and it needed work, can I use the renovation loan to do the fix up on that if I'm going to live in one of the units?
Absolutely. Yep. So you can purchase a 4 unit. You could renovate the 3 units. That's going to increase your monthly rental income from it. And as long as you're occupying 1 unit, that's perfectly allowable.
And from an underwriting standpoint, can I use any rents on those duplexes to
Yes.
offset?
Yep. So the
Okay.
non-occupying units you can use the rental income for.
Okay. So we got interest rate covered. We got type of home. So I know the 2 to 4plex, your regular single family. Can you use it on mobile home?
You can, yeah. So as long as the mobile home does have that HUD data plate and it meets HUD guidance for being qualified as a manufactured home, you can use the VA renovation on it.
So what exactly in my mind, I'm just thinking appliances, right? Maybe siding. Is there anything that you've seen in your experience what that loan's been used for a manufactured home?
So for manufactured home, it's typically just those appliances, roofing and siding if needed. But typically we look at things like appliances as kind of the number one.
Can you put a different foundation on it to upgrade it?
So you can't change the existing foundation. You can repair the existing foundation, but you can't change it.
Okay. So I can't change it even though I may improve it.
Correct. Yeah. It's
Okay.
one of those weird ones, but.
Okay. What other things are we missing? I know you do a lot of presentations, you do a lot of webinars on this. Is there any other ideas or tips that you can maybe share with us today on this? Any experiences that you've had that you've seen this loan help?
I think the number one thing is definitely every loan if there's any updates that are going to happen post-closing should be in a renovation, because you are creating equity in the property with as little as $10, $15 a month. And from a cash flow perspective, it just makes sense. And that's a huge part there, is you are creating equity in that property. If we're looking at creating wealth with a VA loan, you are creating equity with a renovation. If you're doing $100,000 worth of repair, it's coming back $150,000 in that as completed value. There's instant equity right there.
Okay. And can you do a manual underwrite on these?
We can do a manual underwrite, yes.
Okay. Are those a little bit more difficult to do versus your traditional VA with more hands in the pot, so to speak?
They are slightly more difficult just because of a couple of more moving pieces. But again, they're really not as complex. A renovation loan isn't as complex as a lot of people think. It's simply just your standard credit package, your standard loan, plus the inclusion of a contractor bid.
And then I know we talked a little bit about the appraisal. Do we have to do a final inspection when we know that you guys are handling it on the back end after they've moved in, or is that something the loan officer still needs to be involved with?
So once this loan closes and everyone's at the closing table, we take over from there on every step of the way. The renovation draws, the final inspections, we take care of all of that on our side. Loan officer, realtor don't have to get involved.
Okay. And if you're exempt from the funding fee, there's no additional cost whatsoever. You're just exempt from the funding fee on that.
Correct.
Okay. Well, this is great information. I've actually been refreshed and learned a few things on this. This is a great topic that veterans, I mean, they already struggle with knowing what kind of benefit they can get with their VA home loan, in addition to what they can use to make the house how they want it to look, and just finance that in. And obviously we want to make sure the payment fits the guidelines and the ratios, right? If that doesn't work at whatever amount they need, then they're just going to back off what they can do, or maybe get some money to the table to make that work? Or would that be a way to structure that?
Yeah. So if we're looking at renovations that kind of disqualify the loan, we can either back off the renovations, or the veteran can bring a little extra to the table to pay for those renovations. Either way, we can work it either way to make it work. If they do want to back down the renovations and then complete those at some time post-closing, that's an option as well.
Okay. And the other renovation loan they may do if they can't get the VA is what the Reno, what's the conventional one? Home style? Yeah,
so there's the home style and the choice renovation for conventional, and there's also the FHA 203K for renovations.
Right. Okay, so there's other options out there besides the VA if for some reason or another we can't make that work with the VA home loan.
Exactly.
Excellent.
Guidelines are slightly different for the other ones, but accomplish the same goal.
So at the end of the day, we need to market to our realtors. We need to market to our client base, and let every veteran out there, active duty member, know that this is an available product that can most definitely benefit them greatly. Yes. I do appreciate you coming on. Again, this is Trey with TPO GO. He's the vice president over there. We appreciate you being with us. Great information. And for those that are joining us or have joined us to listen, we thank you. We thank you for your service, and we'll catch you next time. Talk to you soon. If this episode has been beneficial, we'd love to hear from you. Please leave us a review on your favorite podcast platform. Also, for regular updates and tips, make sure to follow our social media channels, which you can find in the show notes. Until our next episode, keep making homeownership dreams come true.